Hello, this is Jordan, and this is the Precious Metals video market update for Palisade radio listeners. Today is Tuesday, November 18th. In our most recent video, published about 2 weeks ago, we focused solely on gold. Now today we'll focus on both the stocks and gold, and in this first chart we have GDXJ at the top, GDX at the bottom. So juniors at the top, large caps at the bottom. This is a weekly candlestick chart. Right now we are in the middle of the third week of this rally, and I've drawn some red lines here on these charts to show where there's potential resistance and how much farther this rebound could go. And as we see, it's already been a pretty good move. GDXJ has already rebounded from below 23 to 29.35 today. That's where it closed. And GDX has rebounded from below 17 up through 20. So clearly the market is in a bullish mode as far as the very short term. Looking at where the resistance is relative to today's close, it looks like this rally could continue for a little bit, and that's about all we can say. Once the market gets to the resistance zone, we'll have to reevaluate if this rebound can move much further, or if the market is going to come back down and retest the lows. And obviously the market can retest the lows in a very successful fashion. That would be very, very bullish and might signal that the bear market is over, or the market could go lower and then make a new low, and then we're still kind of in a bottoming process. But anyway, let's just keep in mind some common sense. Looking at the candles, other than GDXJ, most of these gold stock indices were down 9 straight weeks. Just look at GDXJ at the bottom. You have 9 weekly black candles in a row. So the sector was extremely oversold and in need of not just a little bounce, but a big bounce. That's what we're getting. We're getting a big bounce in the stocks, but thus far not much of a bounce in the metals. Obviously the stocks lead the metals, so it's good to see the stocks showing more strength. But for me, this has kind of been the bugaboo of the last 18 months or so of this bear market. Every time the stocks have gotten extremely oversold, they've rebounded, and it's looked like maybe they could have put in a major bottom, whereas at those times, gold has always kind of been left behind. I mean, remember this past summer, it was pretty weak. You can look there and see it only rallied from about 1240 to 1340, 1350, when the stocks had a much better move there in the early summer. And the stocks have had a pretty strong move over the last 2.5 weeks or so. And look at the metals. They haven't really moved that much. So we'll have to see what gold and silver have in store for us in the coming days and weeks. But they remain below their resistance targets. Gold closed at 1197. We'll round that up. Its next key resistance is 1240. Looking at silver, it closed at 16.17, and that could rally potentially as high as 1850 or so. So the metals aren't showing the same kind of strength, but they do have some more room to move up. And as far as trying to figure out if the sector has made a major bottom or not, one thing to keep an eye on is how gold is performing against the other asset classes. And so that means, how is gold performing against equities? How's it performing against the other currencies? How's it performing against bonds? And these are two of those that I'm keeping an eye on. The top chart is basically the price of gold against the foreign currency basket. It's basically showing, if you take out the dollar, what is gold doing against all those other currencies. And then the bottom is gold against the S&P 500. Something I should mention, if you go back to the 2001 bottom, the 2008 bottom, and even that significant bottom we had in 2005, And if you chart gold against these other asset classes, these other markets, it was showing a lot of relative strength. Remember back during the financial crisis in 2008, gold had already bottomed against the S&P well before October, and it bottomed against the euro and the foreign currency basket, I believe, in September. And where we are right now, gold against the S&P is still very, very weak. So there's no sign of relative strength there. Gold against foreign currencies, it is showing a little bit of strength. I show the 400-day moving average there. Gold's about to test that. Looking at that chart, the close was just below 49 today. The 49 to, or I shouldn't say 49, the 50 area and maybe even 51, the March high, that's very significant. So this is something I'm going to keep an eye on in the coming days and weeks to see if that chart can really push higher and have a breakout. If that does, it'd be very bullish for gold. But if we see this chart kind of start to roll over again and this rally peters out, that to me is another signal that the bear market isn't quite over yet. That's all for today. Thanks everyone for listening and watching. You can visit my website at thedailygold.com. You can email me, jordan@thedailygold.com, with any comments. And I have a free newsletter that you can sign up for. There's a sign up box in the top right-hand corner of my website. Just put in your email address and you'll get weekly updates, which have some samples of my premium work for premium subscribers. Thanks everybody for listening, and I hope you have a great week.